Good morning, everyone. Oh, hang on a second. Microphone check, screen check. Hopefully the microphone's a little bit louder this time around. Hopefully it's not too loud though. Let me know if it's too crazy. On the YouTube side of things. On the other side, we already know that end's working because we've already gone through there. So I know that part's working out well. So welcome. Mic check again on the YouTube side. If we've been kind of messing around with the settings, let me know if the mic's too loud, too quiet, whatever. But I think we're all right. Hope you all had a fantastic day yesterday and had a chance to kind of rest up and get ready for the day ahead. We obviously had some things going on. If you saw the post in the on the YouTube side there or in the Discord chat, but as per the usual, make sure to read through on the right side of the screen there the morning PDF. The morning prep PDF. Very important to understand everything that is inside there. And then just a quick note for you all as well before we jump in on the YouTube side of things. The stream does have between a 5 and 30 second delay, which will definitely impact the timeliness of what I may be talking about at any given moment. Good morning. Looks like everything is working correctly here. Fantastic. All right. So, I just want to take a second, like we do every day, to thank all of our new members, subscribers, Academy students, VIPs, and everyone in between. Thank you all so much for the support. I'm super excited to have you all on board. Welcome to the SSFTG family. If you aren't a member yet, you do have a few different options available to you to check out if you're looking to further your trading education and career. One of the easiest ways is right here on YouTube. You can check out the join button below the stream, which will get you access to the extended hours room, where we continue the morning room with a little bit less delay to the end of the session. YouTube members also have access to the communities area, where I post all kinds of different chart setups, stock charts, analytics, and more, and that's on YouTube. Of course, every member also gains access to the Discord chat server, and you get the awesome badge next to your name on YouTube to show your support, and it just looks really cool. If you want to take a step massively further forward, though, in understanding our trading approach and what it is that we're doing every day in the room, look no further than the Day Trading Academy. This is where you can learn how we do everything. But listen, this isn't a small little PDF guide that you're going to finish in an afternoon, all right? Yeah, we do have a quick start course, but to really dig in like the Academy does, you're looking at about 19 plus hours of video course material. Along with the course, we have homework and study guides along the way to really make sure that you're understanding what's going on while you navigate the course, which I will review personally. And you get the DTA upgrade discount too, which is awesome for when you're ready to go up to the final tier, up into the Executive Suite VIP. And that's where you're going to see kind of the top floor where everyone's hanging out. And the beautiful thing about VIP is that you have access to everything that's SSFTG. The Day Trading Academy, private Discord chat, future updates, new strategies, monthly webinars, one-on-one access, everything else. It all comes as part of the package, and VIPs gain access to the fully dedicated, non-delayed stream for the entire session, meaning that they're on the fastest connection that you can get without any delays from start to finish. So whether you're here for the very first time or you're one of the VIPs over on the dedicated stream, welcome. Glad to have you trading alongside of me today, analyzing these crazy markets of ours. Let's see what all is going on today. Don't forget to grab your morning DP levels. Those are posted for you this morning on the Major 7. NASDAQ, S&P, Gold, Crude, Euro, Bitcoin, and Ethereum. It's a race every time. As far as the news is concerned, we really don't have a whole lot. Morning, Steven. How's it going? Everybody else so far, welcome. We've got, again, this IEA monthly report stuff going on, which is, I feel like, really messing with crude oil, although I feel like a lot of the damage has already kind of been done back and forth. If traders are in short or long, they've had a chance on either side, I guess. I guess we'll just have to keep an eye on what crude wants to do. That was earlier this morning at 4 o'clock. Along with that, at 7 and 8:30, we also had the earlier news announcements. Going into today, there isn't anything else unless you're an agricultural trader. If you're an agricultural trader, today is a day that you might not want to trade. Period. End of story. The reason for that is because it's WASDE. Now, the WASDE report comes out once a month, thankfully, but it is one of the most volatile days that you will ever see on the agricultural markets, typically, outside of like, you know, an event of some kind. The WASD report, if you want to see volatility that is really, really fun to watch, but incredibly dangerous to actually partake in, watching soybeans during the WASD report at noon is really, really cool. The amount of movement that they can cover is just nuts. Now, as far as trading it, be careful, because if you're on the wrong side of it, guess what? Slippage hurts a lot when it jumps, 30 points. You're not going to get filled anywhere inside there, and it's going to hurt the whole way up. So it's incredibly dangerous. Really fun to watch, though. So just something interesting maybe later today, if you're looking for a market soap opera. Outside of that, though, there's not really a whole lot else going on. So let's take a look at some charts here. On the S&P side of things, we've got this... it just doesn't stop going up. We're so far detached from what happened over here that we've kind of created this ramp up. And you can see it if you were to look at a 60-minute chart. This is nothing more than a rally, a pause, and a continuation. It's not even really a pullback. I guess it is. There was that beautiful little trap we were talking about there, and that's been going up since then. Now, with that rotation higher, we've got to look at this from where we are in the cycle. What is the market doing? Obviously, this is a very big pinnacle point of interest. So let's see what they wanted to do. We had wave 1 to the upside, pull back and do an L3 on wave 2. Okay, well, an L3 usually would dictate confusion. Now, if they have a strong breakout, the follow-through would usually be an L1 if they're able to get it. They did have a halfway decent breakout to the upside, but you can see that was not an easy fight in there. They came really close to the L2. Almost invalidated the entire bull rally. But they didn't, and they kept it going to the upside. So we have the L3 into L1 transition right out of the textbook, straight out of the academy. Beautiful movement to the upside. Now, the traders are looking for, the next setup. What's the next thing that takes place? We've got this first rally up. We've got the L3 into L1 transition. What happens after that? We've got another L1. Well, interesting. Well, now we've got two L1s. That means that we're looking for another one, and for you Academy students, you know exactly what you're looking for. That was right there. And if you blinked, you missed it. I wasn't here yesterday to grab that little pullback, but that was the follow-through pullback for the L1. To the tick. Perfect. Spot on. Cannot get any better. Now, as far as the next pullback, it doesn't mean that the next pullback has to be deeper, but I've got my concerns. Usually with a cycle that has 3 legs to the upside. If you look at it from an Elliott wave structure, what is it? Wave 1, 2, 3, 4, 5. Uh-oh, right? Well, what do we have? We've got the 3 pullbacks. What are we expecting next? We're expecting correction phases. That doesn't mean it has to reverse, but it does mean that we should expect a deeper pullback. Now, if the market continues to go L1, 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 that's fine, and it can keep doing that. We've seen that happen before multiple times. But eventually, we will get a deeper pullback, and that deeper pullback is assumed to be at the L2. At the moment, if we look at where the L2 is structurally, it is in an incredible place. Try saying that sentence 5 times fast. Good Lord. We've got the L2 lining up just around 40, the 420 to 410 area, that good 10-point range, maybe on the inside of that 8-point range. That's a really nice spot if you're looking at it from a structural perspective, because that is a beautiful trap pullback that could potentially not take out the previous confirmed. We talk about this over and over and over again. I love these. You knock out one of the confirms but don't take out the next. Fantastic. That's the whole reason why the longs went long here. Same thing. We'll see, but it's looking like correction phase, unless it just, if it just hits the gas pedal, there's nothing you can do about it. If it just keeps going up. Over on gold, we are seeing what was anticipated. We've got the higher low transition, 2 legs down. They actually didn't go as far as I was expecting them to, but realistically, look at the twin reversal at the bottom. It's about as obvious as possible. And if you weren't sure, higher, low, breakout, higher, okay, it gets a little bit more obvious now. From a volume perspective, if we're looking at it from the top all the way down to the bottom, we spent the majority of the time in the middle. It's likely that we would have a POC in the middle, right? Oh, wait a minute, not quite. Uh-oh, something's different. We still have that POC up at the 1814.4s. Remember, those are those earlier longs that got really, really messed up. Now, as far as a build-in structure is concerned, typically you want to see 3 building nodes. We don't have that, but if we go backward, we've got 1 little spike, 2 little spikes. Maybe we're waiting for a third. If this wants to narrow in where the market is now, we could have spike 1, spike 2, and spike 3. That might take a little while to get that job done, but you can kind of see what the job of the bulls is right now. They're trying to get the reversal off of the base. And whether or not that comes off of a trap underneath the lows, or this little inverted head and shoulders is where we reverse and never come back, or whatever. Either way, the objective for the bulls is to try to maintain this movement to the upside, but we haven't shifted the POC down. That would suggest that the sellers are still short and the longs haven't done enough, or the shorts haven't gotten out of enough for the market to necessarily have to reverse right this second. There have been some really big obvious chunks in here, so it doesn't mean that it has to go all the way down either. But, I mean, realistically here, under context, we're still underneath the POC and we haven't seen the shift. Sellers still have a shot. A beautiful area would be right down here. Right around the 1720s, I'd be at the -1. Oh. Fantastic. On crude oil. Crude oil just kind of herky-jerking around, not really much going on, but a fairly obvious inverted head and shoulders with a nice slanted shoulder, or at least it's slanted in the right direction for the perpetual breakout. Remember what a head and shoulders is. A head and shoulders is a continuation pattern. So that tells us to expect the market to come back down to 65 at some point in the near future. But that doesn't mean that, given that we do have a head and shoulders and a break of structure, that we shouldn't see a good 100 to 200% move to the upside first. So the way that I'm looking at this at this point in time would be, we've got the neckline break, fairly obvious. In terms of the overall structure to the upside, we've got the, let's see, 51, 2 would be right here. So 200% would be here, and 100% would be here. Now look at where those line up structurally. This one, oh no, this is the 150. What the heck? Why do I have a 150 on there? There's the two. I was like, that's too close. That doesn't make any sense. That's the two. Okay, so this is a lot nicer. Given what's going on here, we've got that huge back and forth, a little pop above the top. Ooh. But that shows you the potential here, right? I know in the long term, the market could very easily and likely return back down to the 65s at some point. But in the near term, the bulls are looking like they've got a good shot. Over on the euro is grinding its way back down after, geez, just an absolute massacre off the top here. Now, in terms of the driving to the downside, the POC is kind of middle weighted here as well at 18,465. We're way underneath that at 7,390s. If anything, we've got 3 declining volume, which is still suggesting that if these are shorts, they're taking profit. They haven't done enough to even come close to shifting the POC. But there is one right here. If you look at how close those are incredibly close. So if the market trades up here, it's not going to have to do a whole lot of work to use that as a reversal point. So it's around the 17,700s. So the bulls may still have some juice in the tank. We'll see. We talked about Bitcoin and Ethereum in the VIP kind of earlier morning session there before everything opened up. But as far as Bitcoin is concerned, I mean, right now it seems like we're really running into a lot of resistance up here, and it makes a lot more sense to see a deeper pullback. A deeper pullback structurally, if we're looking at this from the nearest bottom that we've got to go, we've got L2 into, that wasn't anything, into an L1, into another L... that did not hit an L2. Boy, that came close, but that was another L1. So we've got an L1 into another L1. Bulls will be looking for the next L1, which they got right here. That worked out immediately. The next continuation, the next assumption is that we get a deeper pullback, and the deeper pullback zone lines up right about here in the 44 to 43. That's the hot spot. That's the major zone of interest for continuation on the bullish side for Bitcoin. As far as Ethereum is concerned, I mean, again, we really didn't have a new swing low to work with, really. This thing just went screaming out of the gates. But, I mean, I guess for lack of anything else, the first rotation up was an L4. L4 followed through with an L1, which is expected. We've got another L1, expecting the third L1, which follows through. The next pullback is an L2. That's already been exhausted. They did work out with another rally up to a new high. Did they get a new high? They didn't get it there. They got it over here. Now I've got another L1, and they're back to an L1 yet. So we don't really have any patterning going on right now for Ethereum, at least not on the 15-minute chart. Bitcoin makes some pretty good sense for a nice little pullback. Looking at the NASDAQ and kicking things off from that side of things. Let's get that over there. On the daily chart, we are starting to see a little bit of pullback motion going on here. Another bear bar coming off the top. Now, if we look backward using history, let me get rid of these incredibly bright volume profiles. Jeez. If we go back and we look at the last time that this has happened, we had the incredibly strong bear bar, but it was, if you look very, very closely, not the top. That was not the top candle. So given that that was not the top candle, if we go backward and we look at every time that we had a very strong candle that was not the top candle, that ended up going sideways for a little while, hitting the top and rotating down fairly aggressively. We have, that one really wasn't that big. That was disgusting in there. This one had follow through, so that's a different story. That one was the top, so that doesn't work. Here's another good example where we had the gigantic sideways structural move. They poked their head outside of the bottom, rotated up for a little while, and then dumped. And that's where the larger corrective phase came in. If we go before that, we also had a very large bear bar, but they had follow through, different context. So the one thing that stands out very, very obviously here is every time we have this big bear bar that is not the top but close, we trap out of the lows, rotate up through the highs, and the sellers try to take their turn to the downside. If the sellers succeed, it's usually a very large pullback. If the sellers fail, there's usually two strong legs to the upside because it's not expected. It's expected that the sellers succeed here. So when they fail, two legs to the upside makes sense. And then they add follow through the next time around. They kind of came back with a vengeance. So this time around, we have to ask ourselves, where are we in this sequence? Strong bear bar that wasn't the top. They did not poke outside of the lows. So we didn't have a similar situation in that sense. They didn't trap out of the lows first. We're rotating above the highs. This is a really big, important area still. We're right inside those previous areas. I got it marked up with a giant purple line. But this is the zone right here. And that's why it's so important, because if it fails here, then we're looking for a deeper pullback. And every time that deeper pullback happened, it challenged a previous major swing. The next previous major swing on the NASDAQ is 14,330s or so, which is where we've already been talking about. 14,440, sorry. So we'll see what they want to do, but from the 15-minute perspective, I mean, this is still feels like we're in a corrective phase going sideways. We had a nice little wedge. They broke out of the wedge, used it as support for a continuation to the upside. Since then, I mean, if we're looking at this, we kind of had the attempt for the bulls to get that new trend to the upside, and so far it's been a lower high, another lower high. If they start breaking down, I mean, there are the deeper dip buyers to look for that pulse back to the upside, but honestly, what better spot than down here? You've got that previous structural trap that would fit inside that next swing. It's a little bit further down. It's through the 1618 and all of those. Maybe a 200. The 200 would put it right underneath that low, right at around the 830s. It just feels like there's a lot more potential to the downside, at least down to the 14,950s. We're just stuck on top of the 15Ks right now. And this cycle feels like it's not necessarily complete. If we're looking off of the top to the current pullback, at least, the POC is still back up in the 15,108s. We've already got a sell zone that's waiting there. As far as the bullish zone of interest, if we go back from the bottom all the way up to the top and look at the impulse is back here at the 15,030s. Now, we were talking about how important that level was in Discord as a pullback zone, and that worked out incredibly well, but it couldn't make it up to the highs. That's incredibly disappointing. So it worked out amazingly well, depending on where your entries were, but they still failed the primary objective, which would be getting back to the highs. That's what every trend trader's objective is, right? Get back to the highs or get back to the lows and keep going. This tried, but it failed. So when it failed and rolled back over, and how aggressively it rolled back over, all of the longs were thinking, oh no, what just happened? My position, no, So when it came back up and it offered them a chance to get back out at a reasonable zone of interest, which was likely their 2-to-1. If we go back, remember, at the time, this was an impulse move to the downside. My volume's broken. Fantastic. I can't even use it as an example now because my volume's broken. I have to assume that it was probably in there then. Continuation to the upside, looking for those longs. All they got was a scalper's objective and it dove back down. You can see that POC, if that was their break-even point, where did it come back to? They got out of break-even. After they got out of break-even, it reversed all the way down. I just don't see why buyers would hold it here. You know, like, yeah, okay, cool. Previous swing. Great. Congrats. Where's your defense? You know, I see your front line, but do you have anything over top that hill? Or is there just a big empty valley behind that hill and you're bluffing? Right now, I think they're bluffing. I think we've got a deeper pullback. That needs to happen first. Now, we'll know that their bluff has been called and they have failed on a break underneath the lows around the 960s. Right now, it's, you know, still early to the party. The one big thing that would change that context would be if the market somehow manages to get a very aggressive rally back above those 30s. Then you would have a continuation context to the upside because they would likely spend so much time there that the POC that is up here would likely shift down as well. Then you've got kind of a double bang for your buck, if you will. Right now, the bulls aren't looking too healthy. I don't know. So far this morning, wow, this thing is like following, it's following to the T today. You've got, I mean, look at this thing. This is ridiculous. 1, 2, 3, 4, 5. Reverses. 1, 2, 3, 4, 5. Starting to reverse. 1, 2. Like perfect. All the way up. 5 waves up, 5 waves down. Pick them when you're up, pick them when you're down. But they didn't break the lows, right? So the fact that they didn't break the low down here really would lead me to believe that the bulls still have some possible context that they're trying to get a reversal back to the upside. There's a lot of proof that has to happen yet. The sellers still have a lot of control. But, you know, where we are in the grand scheme of things, let's zoom out just a little bit and see. Where did we come from? It's a pretty heavy bear trend to the downside. Looks like this may just be a corrective flag. Maybe an ascending wedge, something along those lines. So, you know, the trap above the highs and this really strong reversal down and the fact that they couldn't break the lows, that's a problem. But this could just be a pause before that next pierce. And if they do start piercing that, that's where we start seeing that bubble burst. From a cyclical standpoint, if we want to keep track of that, we've got the first L5, and that rolled up into an L4, so they're kind of climbing the ladder a little bit. L4 into an L3, okay, into an L2. They couldn't break up through another high, but what do you want to bet if they did? That next pullback would have been an L1. Well, they couldn't keep climbing the ladder all the way up, but they almost made it. Started reversing back to the downside. Did they do the same thing? Nope. We got an L4. They broke down to a new low. We've got an L2. More continuation down. We're kind of stuck on an L1 right now. Not as clean patterning to the downside. The other thing that stands out is how eerily similar this first leg looks. For God's sake, just put on the right spot. There we go. And that would have a measured move completion right about there. So, you know, I mean, there again, from a completionary standpoint on value, it's a perfect value pullback. It didn't necessarily have to make a new low, I guess. Hey, how's it going, Ace? Welcome, welcome. Everybody else so far, welcome. Hopefully you are all doing well. Looking at the S&P so far, well, the one thing that does stand out very obviously on the S&P is that we have failed to close that gap. And the fact that they failed to close that gap down there in that pulse, we've seen that happen before. That's what was that, a couple days ago? That's what created, yeah, that dive down there, and they completed it. Everything seems like we should be opening up with a slightly more bearish morning, but then we see that the NASDAQ cycle to the downside has already been completed. Another potential way to look at this would be that wave 4 on this cycle should be a little bit dirtier, given how wave 2 is fairly clean and concise, and we could chop out the middle if it really wants to show some good failure structure here. This may just be looking for that final wave down. Next big time slot, 9:28. Right around the corner. As far as the 15-minute perspective is concerned, I still feel like the NASDAQ makes a lot more sense to dive just a bit deeper. At the minimum, 14,920s. But if they demonstrate enough failure patterning here, then a cycle back to the upside makes some sense. Given that they have been following these 5-wave cycles up, 5-wave cycles down, the whole way through, up and down, in the micro scale, I do have to pay attention to the fact that it just did it again, right? We were talking on how we had 1, 2, 3, 4, 5. Same thing, 1, 2, 3, 4, 5. They did reverse off of it. Are we looking for 1, 2, 3? Where's 4, 5, right? We haven't quite seen that yet. Bulls still have a shot. Yeah, and then the other side of things would be this initial drive lower. What was their mindset down on that impulse, right? Where are we finding that POC on the move down? And I mean, this doesn't help the bulls at all. This looks terrible. On the higher low, they changed, which is likely what we're fighting over right now. So this higher low transition. This higher low transition where the bulls came in the first time, right at the beginning, that's where we're fighting over, right? We're at their break-even point. Initially tried rallying up, they shifted the POC, rotate higher, nice bounce, 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 overnight bounce. Okay, what's going on? Why isn't this thing going? You can almost see where the tipping point's going to be. And we've got the open in like a minute. So what perfect timing. One minute until the open. Nice bear bars plotting ahead of the open, but we already know that we've had a 5-wave cycle to the downside. We should at least expect a repetition of what we've seen before, 5 waves to the upside. They have not been perfect. They have not been impulse, which means that we are still in a correction, which means that the market is still waiting to figure out what it wants to do, probably from a bigger picture, which I think is pretty obvious to see. Sellers are attempting to come in ahead of the open. Really, really awkward location to be opening up here, but, well, we'll see what they want to do. I mean, look at this 94 POC. That's kind of like the last ditch. S&P opens up with a small gap to the downside, still inside. Yesterday was a big range. Beautiful bear bar for a continuation to the downside for sellers to drive it lower, and fantastic cycle. I only had a chance to get one. That thing was just gone. I wish I had a chance to have grabbed more. Again, the downside makes a lot of sense for the continuation lower. I took it with the scalper's objective, and it happened very fast. Wow. Big cycle down. So this makes a bit more sense of what we were talking about before the open. So we've got 1, 2, 3, 4, 5. That means that this is an impulse to the downside and lines up much more clearly. Again, we weren't really sure of that until we saw the definitive proof, but now that we've got 5 waves to the downside, I certainly wouldn't want to be short anymore. Or only short runners, etc., which would now be break even and out. So maybe they push down again from here. Remember, the bigger picture still has a lot of downside potential. Okay. Closing back underneath that measured move completion area. Feels like the market's starting to run into more trouble here. Break even reload with a bit more proof now that we're closing underneath. Yep. And you could see them bail as soon as they saw it too. Once it closed underneath, they're like, yeah, nah, I'm good. I'm good. The buyers who were trying to buy that value pullback got the first continuation up, dove underneath, tried again, like, nah. We do now have a confirmed POC on that last break, which is up there and has already been exhausted. Already kind of talked about that, but it's there. Larger pullback on the S&P would be underneath the 3475 area of interest. Shorts on the very bottom, the first shorts to get stuck down here. They are going to be hanging out at around 3275. Given that we didn't fill that gap in at 2950, though, POC at the moment is building to the downside, and we do have a completion of the 5 waves, so a resulting rally back to the upside does make sense. As far as the 5-minute chart is concerned, although we still have a minute and a half left, we have POC, which is currently under the active market. Oh, just kidding. Never mind. Just shifted up. Sellers are trying to take back over again here a little bit. Very nice bearish continuation to the downside. The question is, it's forcing sellers to sell directly into that break-even point, so I'm not interested in shorting there unless we can gain a bit more proof. But realistically, this is tough to short. I mean, we've already completed the 5 cycles down. Any new low is just kind of a little bit of extra icing on the cake, and they're starting to close back above that value area. That's tough. They've got to prove it a little bit further. Remember, the actual break point is underneath 63, which we haven't hit yet. That definitely helps. See if sellers can keep this going or what they want to do here. Okay, well, I mean, there it goes. Yeah, okay. Fair enough. Jeez. So, I mean, realistically, this looks like they completed the 5th wave back here, and we've done nothing but consolidate since then. Megaphone style. Getting a nice down thrust, though. The next cycle completion, then, or the assumption would be back up here. What better spot than where the 4th wave topped out, around 15,005. First 5-minute POC is way up there in 94. With the new continuation of the downside, first we had bulls who were trying to go long, but they've been totally dumpstered. It happened the majority of it at the open. They were able to make it back to an L2 though, which is not typically expected. And now we've had 2 L2s back to back. So I mean, realistically, the next pullback should be like an L2. We're finally starting to break down through this area. Major zone of interests for the sellers is down at 1650s or so. 20s, we'll say, for easy numbers. Looking for more continuation to the downside here. Ooh, now that 6-1 lines up real close with the L2 here if they can keep it around this area. Now we're starting to get to the bottom of the channel here. This becomes a bit more of a problem. So sellers really needed to keep this to get a correction before they made this whole move down to the bottom of the channel. But there's still a chance that we get at least a higher low. These drives are also incredibly and eerily similar. And now we've got round 2, which just completed its downside objective measured out. So, I mean, it makes a lot of sense to see at least a bit of a larger lift than an L1 here. POC for the S&P is hovering at 44.35.5. The market's attempting to try to stay underneath it, although it did close above it on the first 5. I'm not necessarily interested in the first L1. Given the context here, it makes more sense to see an L2. And further continuation to the downside. The one nice thing that I do like about this is the fact that we missed the channel top up here. And this drastic miss at the top of the channel could suggest a larger breakout. And at the moment, it's fairly measured. So there's still some definitive downside pressure potentially. It just makes more sense to see it further back. Looking across the field here, seeing what's going on. We've got more continuation to the upsides. Crude oil's trying to get that L1 continuation higher. Gold's not really doing much. Everything's just kind of pausing so far around the open. Just the index is jumping. Not really much of a surprise to see a lack of resistance at L1. We kind of already talked about that. Give me 1 second, I'll be right back. And just in case... Alright, I'll be right back. All right, I'm back. Sorry about that. We have a couple things going on here still, obviously. Did not get filled on a pullback. A little more continuation to the downside. Still just kind of bleeding lower. Now, noticing what's going on, this first cycle down started off of an L4, and L4 is typically going to procure an L1. It didn't, and, well, I guess actually, technically, it did get an L1. Wow, talk about minute. They continue down to the next one, which is an L2, followed up by another L2, followed up by another L2, followed up by another L2. It's almost like they're repetitive. And now we've got the L1s. So this is either the last continuation for the sellers before they give up, and we see a little bit of a larger pullback, likely to L3, given that 2 has been the continuous, and a little bit more of a reversal, which kind of makes sense because we're at the next measured move lower. Or we see this be the stall point before a major breakdown. The POC on the S&P is currently under active price, and if we're looking at it on the NASDAQ, it is also currently, at least, with another 3.5 minutes. Just kidding. Now it's above it at 963. In that first 5-minute bar, there's a little bit of candle gapping, but chances are that job's done already, right? Oh, not quite. We still have downside targets for the candle gap. Market is continuing to rotate to the downside. But finally, with after, what, 3 multiples of a measured move to the downside, we've got a little bit of a pullback. The L2 is the major zone of interest, but the L1s just got absolutely obliterated for the continuation down, which, again, makes sense. I thought it was going to pull back to L2 a little bit earlier, but they just missed it. Still looking for defense at L2 to L3. Given the completion of this third measured leg to the downside, and the fact that it's coming at the channel lows, I need a soundboard of all the different sounds that I'm not so impressed here. For the sellers in the short term, that is. Makes more sense to see an L2 to L3. Bit more continuation up, trying to get more follow through. There we go. Nice jump into the L2 zone of interest. Still driving though. Okay, seeing a little bit more here now. A little bit more of a pullback, a little bit of a pushback, a little bit of a pause. Very aggressive first leg to the upside, though. Likely to find at least a secondary portion of that. That said, the last time we had a really strong bull leg, it totally failed. So, I suppose it doesn't have to. We are within the L2 zone of interest for a continuation to the downside. We're starting to see volume shift fairly aggressively here. Price is having a little bit of a hard time going, though. Jeez. Alright, so far it's looking okay. Given that I've already had to exit one, I'm going to reach out for an attempted 3-to-1 on this. It's already made me have to really kind of struggle bust this thing. So downside objective back towards those 3-to-1s makes some pretty good sense. Still watching this zone around the top of the L2. Secondary pulse to the upside, finally actually testing the L2, but this next jerk up to L3, this is the hot spot, because again, if the L2 is going to fail, that's going to be the next spot, which we've been talking about for a little bit as well. First area of interest. Wow, geez. Okay, well, I didn't really have much of a chance to do anything on that. That's going to change. Still looking for a continuation to the downside. First objective for scalpers is off, and given that it made me have to go back that far, I mean, I don't have really much of a choice. Now, I want to see how it responds around this POC. We've got the scalper's objective met. Can they finish the rotation? Remember, L3 doesn't mean that it can't reverse back to the downside, but POC shifting a little bit there, volume jumping around. More momentum down. They're now trying to get underneath that POC. You clicked the pause button when I said be right back, huh? Okay, yeah. So why is he taking so freaking long? I'm going to use this area as a finalized pulse on that last one. If I had more, I would look to try to hang on for a next one, but this area is too juicy to not want to take at least something off the table. Unfortunately for me, I've only got the one left. But realistically, I followed the plan. We've got down back to that objective area. See if they can come back up to these 76, 75s. A lot of sellers will be looking for another way to try to get back into the downside. Beautiful continuation, though. What I would also like to see from the other perspective, because we have completed some major objectives here, if the bears are going to take over, I would really like to see the bulls fail, right? And the bulls right now have a POC at 72 quarter that's currently underwater. That's good. Bottom of this channel's causing some havoc, but at least this is starting to make a bit more sense now. Major point of interest for swing longs is going to be around the 960, 75s. God, jeez, okay. Remember, that's where the earlier shorts got stuck. So when given a chance to get out when stuck, they usually take it. Nice attempt on the 76.75s. They're testing, now shifting to 77. I like that for an attempt to the downside for the sellers because the risk is so small, but the reward is incredible. Because if they fail back above the short-term POC, then realistically the trade is wrong. But the potential, and it's wrong there, the potential to the downside is like a 9 to 1. I mean, that's impossible. It's almost impossible to not want to take that, even if it's only like barely ever right. I mean, that's the risk, right? Which obviously, you know, you're right or wrong pretty quickly. But look at the reward. I'm going to take that every time. 20% accurate on a 7 to 1. That seems okay. Now, the sellers have had a very nice, solid attempt to the downside, which has failed now. I chose to exit very quickly because, again, it's not worth the risk. If they fail, this rotation higher could be a lot larger. We only have, you know, maybe wave 1, wave 2. That means that there's still 3, 4, 5 coming. Let's see what they want to do on this dip back to the POC. Seems like the sellers exited. JH, earlier you mentioned ES sellers objectives 44.32. Yeah, that was the candle gap objective to the downside from... No, not the... Well, the candle gap is... That's gone now. It was a potential candle gap to the downside, but that candle gap has since filled in. The only other thing that you could potentially work with that makes it, in terms of the 5-minute at least, would be like a measured move, which I don't think we've hit yet. Oops. Not quite. They're still staying underneath the POC. I mean, the zone of interest as far as where we are now, as long as they're staying underneath these volume nodes, would be to cycle down and complete the gap down here at 29.5. 29.5. Now, the earlier sellers who were stuck there at 32.75, if that's the ones that you're talking about, yeah, they got out. Break-evens are fairly reliable when they've been trapped sufficiently enough. Sellers are still trying to get this to transition down. Bulls have the completion of the 3 legs to the downside. Oh, wow. That looks absolutely terrible for the sellers if they can't get this bull bar to go down. Oh, man. Look at the way that this looks on the 5-minute right now for the NASDAQ with a POC underneath. Okay, seriously, every time I talk about the POC on the NASDAQ, it changes. Every time. Nice rotation to the downside. If the sellers are going to take it lower, this is more likely the area that they do it. My problem is they went up and they hit that L3. With the test of the L3, that kind of invalidates my reasoning as to why I would want to be short too aggressively. It's not to say that they can't continue down. It's just it invalidates the cycle, the reason that I was looking for earlier. Going into 10 o'clock. Let's get the last questions in here as we transition into the extended session. Pretty solid morning so far. Now it's just stuck in a wedge. From the 15-minute perspective, we do have a very, very nice bull bar. Well, I say nice relative. There's a lot of wick on the top of that, but it's a really big bull bar off the bottom of that channel. A lot of traders may feel like they kind of missed the boat. So trying to buy on the lower end here would make sense. The assumption being that it shouldn't be much more than wick down there. So buyers who are going to be BTFDing down here, they're going to not want to see that hang out for very long. And from the bigger perspective, it still makes more sense for a bit more down to like the 920s. Ooh, okay. Still stuck very much in a wedge. Going back above that previous bear bar, and sellers came back in again. Wow. Okay. Sellers with a jumbo bear bar to the downside, but it's right at the base of the potential wedge that's forming here. You don't really necessarily have to have the bottom to kind of see the wedge that they're trying to get, but now it's starting to invalidate that. More continuation to the downside. We're back down to retest that measured move completion area too. All right, well, I'm not seeing any other questions coming in, so let's transition over to the extended session here, and we'll get it going from there, all right? So if I missed any questions, feel free to shoot me an email, jhb@ssftg.com. Otherwise, I hope you had a great morning, and we will see you actually all next week. Tomorrow we're not going to be running the room, so it'll be next week Monday. So enjoy the long weekend. We've got some things to take care of around here, but yeah, enjoy, and we'll see you all on Monday. For the rest of you, hang out, and we will be back. Well, we'll keep going here in just a second. All right, we'll talk to y'all later. Thanks.